Hi, my name is Tony Dimitriadis. I run an accounting and advisory firm and I specialise in helping ambitious builders and property developers build a financially rewarding, tax-efficient lifestyle business. I'm a certified practicing accountant, a CPA, and I'm now the author of Build It and the Money Will Come. In this book, I will teach you how to master the 5 secrets of running a successful business. Today, I want to talk about the 4th, systems. Charles Atlas said it best: step by step, and the thing is done. Good financial systems need to be in place for you to manage your business. They'll assist in monitoring your financial position so you can move towards your financial goals. They will ensure you have enough money in the bank to meet all of your commitments and will keep you on top of all your statutory requirements. One of the most important aspects of running a business is to ensure you have adequate cash flow. This will enable you to meet all of your financial obligations. Cash is the lifeblood of business. It ensures you stay afloat. Unfortunately, a lot of business owners tend to focus on profit rather than cash, and this is where the cash flow problems begin. Put simply, there's 2 sides to your cash flow. 1, the money you receive from your clients for the work you perform, and 2, the money you pay out to your workers, suppliers, the ATO and others. One of the biggest killers to your business cash flow is slow paying customers. It's great to have lots of customers, but not if they're not paying you on time, or God forbid, at all. The second biggest killer is the ATO. Your commitment to the ATO to pay your GST and pay-as-you-go obligations are paramount. After your workers, your ATO should be your top financial priority. It's one organisation you don't want to get on the wrong side of. The 3rd silent killer is overcommitting expenditure. The way you manage your stock of materials is important. The vast majority of material supplies these days are readily available, and therefore there's no reason to hold extra just in case. The same goes for equipment. Whilst we tend to want to have every piece of equipment that we could possibly ever use, that's not a sensible approach, particularly if there's certain items that would just end up sitting in your warehouse. In addition, we tend to want the best of everything, sometimes just because the other guy's got one. Neither of these are smart business decisions. It's possible to be making a profit and yet experiencing cash flow problems. A simple example is you're generating sales, which increase your profits, but you're not collecting the money, and therefore your sales is not the same as your cash. Having said that, I'm sure you do receive the money at some point in time, but it's the timing of the receipt of that money that's very important. Simply making more sales does not fix your cash flow problems. So it's important to establish the strategies to make sure that you have enough cash in your business to be able to operate on a day-to-day basis without being short of cash and having problems meeting your commitments. One of the benefits of reviewing your historical cash flow is by creating a cash flow forecast to be able to make changes to maximise your working capital. Your working capital is the money you have available to you at any one point in time to manage the day-to-day operations of your business. There's 3 components to your working capital: your payment out to suppliers, your creditors, your work in progress that you've got going at any one point in time, and the collection from your customers, your debtors. How much working capital you have is dependent on the length of time between using your cash to make the purchases and receiving the payments for completing a job. When you're working on a larger project and you know there's going to be a delay in receiving the money, you need to plan for that to ensure that you have enough to pay your workers for your labour, and your suppliers for your materials. So going in unprepared is not a sensible approach. The real issues occur, however, when there's an unexpected delays. For example, you might be doing a small renovation for a client, and whilst you know that you've quoted for the job and you know the length of time, you can never be sure that they're going to pay you. So, depending on the size of the job, you may want to demand some upfront payments or have progress payments. This will enable you to manage your cash flow more efficiently and to make sure you can meet all your commitments along the way. The key to successful cash management is watching every stage of the process and planning accordingly. The quicker you can turn the cycle around by receiving the funds, the better off you'll be. Fortunately, you're in a position to manage your payments out, to control the payments in, and therefore have an adequate cash flow situation. Hope you got a lot out of today. Thank you for joining me. Look forward to speaking with you soon. Bye for now.